Hello and welcome to the Money Show, and this is our budget special where we'll be talking about budget expectation and also Vikas Ki guarantee. Although it is a vote on account, but then what exactly should a taxpayer expecting? What are the market participant and market experts expecting? Let's decode all of this today. I have with me Nilesh Shah from Kotak AMC. Nilesh sir, hi and welcome to the Money Show. Thank you so much for taking time out for this very special interaction. So let me just start with this very basic question. What would you do if you were the finance minister? What kind of expectations and announcements should one be expecting from you as a finance minister?
So thank you, Kavita, for having me over here. And being a vote on account, I'll have to talk about the past. At the same time, since India trades at a premium valuation, and so many investors and market has expectations about India, I'll have to guide about the future. So this will be a vote on account which captures the past and lays the roadmap for the future, hopefully which will meet investors and markets expectations.
So as you just said, it's going to be a balance between the past and the future. Should we be calling it a political budget, or if we have to think from an economy's point of view, interim budget will have important takeaways?
It has to be blend of both. We have to be realistic. Vote on account before election will have to address constituencies and capture the work done by the government. So will there be enough reference about the work done by the government towards women, towards farmers, towards rural India, towards employment creation? Undoubtedly, yes. But at the same time, this budget will have to also meet investors and markets' expectation. The first expectation is that government will continue to lead on infrastructure investment, from roads to railways to water to healthcare to education. Government has to lead investment. We are one of the few countries where total investment is almost matching total borrowing. The second, when you are spending money, you need to raise revenue. Tax revenues are buoyant, no doubt about it. But there is still scope to improve compliance. Most important is non-tax revenue. Government sits on lots of assets, asset monetization, divestment, and other ways of raising revenue. And finally, you have to give guide path on fiscal prudence. India got differentiated post-COVID vis-a-vis rest of the peers because we pursued the path of fiscal prudence. We gave guarantee rather than don'ts. And this differentiated India. We must give guide path of fiscal prudence so that our premium valuations can be justified.
So clearly, Nilesh sir, is going to be a very, or it at least sounds like a very tricky pitch, balancing out all the aspects of economy, markets and investments. But I also want to understand what, according to you, will be the focus area to draw inference for future trajectory, announcements that will help you give a picture of Bharat.
So clearly, we have to create growth and it has to be inclusive. Last vote on account in 2019, we saw Pradhan Mantri Kisan Samman Yojana coming through. I expect some sort of announcement towards benefit to bottom of the pyramid of the society so that their consumption can be supported. Now, whether it comes for women or a farmer or unemployed youth or rural India, that we'll see in the vote on account. The second part is, after addressing the constituency and supporting them, we also need to focus on the glide path of fiscal prudence. We are supported in the same by our ability to raise non-tax revenue. For example, I was one of the few people who advocated monetization of custodian of enemy property. And I'm glad that government has done that over the years. But there is still a long way to go in monetizing real estate part of custodian of enemy property. We have seen tremendous amount of run in PSU stocks. This is time to do divestment on a selective basis at this valuations. So we expect vote on account to cater for the inclusion side as well as for the growth side.
So, Nilesh sir, although it is a vote on account, but then what, according to you, would be the government stand in terms of attracting more FIIs? We are at a premium as far as the emerging market basket is concerned. What, according to you, would be the government focus areas in order to, make them invest for a longer period?
Undoubtedly, if someone looks at on a 1 year basis, India does appear an expensive market, trading at 20-21 times forward earning. We have to put towards looking at India on a 5 year basis, because our GDP growth will grow at a faster pace than peers, because our GDP growth is sustainable as debt to GDP ratio and fiscal profligacy is under control. We will be able to convince investors that on a 5 year basis, India is the cheapest emerging market. I have to convince investors that my GDP growth will be better than peers and it will result into corporate earnings growth. But earnings alone does not give you valuation. You get valuation premium for the governance part. India has been leader on governance path. We need to convince the world that we will continue to be leader on the path of governance. Finally, we also need to tell the world that we are transforming our economy from energy point of view. We are moving from fossil fuel to green energy. We are the lowest per capita carbon emitter in the world. And despite generating growth, we would like to maintain it. If we can convince investors on this 3G of growth, governance, and green, then hopefully people will say, India is a gold standard. Let me pay the price of gold to participate in India growth story.
How much would you think the middle class will be in focus this time?
Which we promise at ET now.
Undoubtedly, government will address all the constituency. Bottom of the pyramid needs more attention for inclusive growth. Middle class also needs to be supported in the areas where they require opportunities. But for them, it will be more related to employment and education and skilling. And entrepreneurs and businessmen also will require some support in terms of stable macros and improvement in ease of doing business. These are all continuous journey. There is no final destination. Every day we have to work so that we are better today than yesterday.
The tax aspect, or let's talk about it from the taxpayer's point of view. We do have an old tax regime and a new tax regime. Now, it's very important to understand as to how can the old tax regime be simplified more. Although we know that people have started opting for the new tax regime also because there is a default setting. But then almost 60% of taxpayers are still lean towards the old tax structure. The demand for simplifying the old tax structure, increasing the basic exemption limit, making changes in the ATC has been long pending. Do you think the government is likely to touch this aspect?
So in my own family, my daughter is under new tax structure. I am under old tax structure. And I have the advantage of a chartered accountant friend who files return on my behalf. I leave it to his discretion. Now, yes, if I try to file income tax return on my own, I may get confused. But if you take the help of a professional, then I don't think so there is any confusion. Today, I file return through the assistance of my CA. I get assessment order in like a few minutes, and I get refund orders in few hours. To me and my family, form number 26AC itself is my income tax return. I probably have some bank account which is, not having KYC done, and hence I have to disclose a little bit extra than what 26AC is having. But otherwise, my entire income is reflected into 26AC. I think old and new both can coexist for some time, and eventually we can migrate to new tax regime.
Good, no? Hey, why are you giving him such looks? Ignore tips and use your own mind before you order. Lots of people give unsolicited stock tips. It can be dangerous. Study the company and the risk associated. Invest only after analyzing.
समझ कर इन्वेस्ट कर।
Presented by Federal Bank, your perfect banking partner.
Hello and welcome. Good afternoon. You're watching Markets at Noon, and this is the special budget edition where we'll talk as to what we should expect from the budget and what impact will it have on the markets, because ahead of that big event, the markets are actually charged up today. The Nifty is above the mark of 21,700. Solid rally across the board when it comes to the Bank Nifty as well. And of course, it's the heavyweight, the likes of ICICI Bank, HDFC Bank, Reliance, which are actually supporting the market mood today in terms of the contribution on the gaining side. Tata Motors is one company as well we are watching out for. It's become the most valued auto company. There are a lot of expectations in the budget for the auto sector as well, specifically the electric vehicle components and the entire ecosystem there. So perhaps ahead of that, we are seeing a bit of a ramp up there. Having said that, L&T is seeing a bit of a disappointment in terms of the Q3 numbers, especially the margins, even though the commentary is quite strong about the growth outlook. So there is a bit of a negative reaction there. Dr. Reddy, on the other hand, is standing out tall. It's managed to beat the expectation. The North America business did very well for itself. So that's one stock to watch out for. And of course, there are those some of the names, likes of Voltas and SRF, where in the numbers, if you look optically, it did look weak, but the market is still giving it a benefit of doubt.
Well, because market believes that perhaps the worst is getting over, perhaps the market is guiding, the management is guiding for better days going forward. In fact, before that, I'd like to just mention that market itself is going very light into this budget, thinking the expectations are very low, market participants are not paying much attention, but there is always, you cannot take away the importance or the sensitivity what a platform like budget has with stock markets. That's the reflection. Whatever commentary on borrowings, on capex comes from the finance minister, market is where the reflection will be seen. Various sectors will be touched upon, however lightly, because there's a lot of reform work happening outside of budget, but you cannot take away the importance of a platform and an occasion like budget for the stock markets. And that's why those covering those positions which are open, the short positions, a lot of fence sitters are covering those positions, and you're looking at a nice short covering bounce taking the Nifty higher. You spoke about numbers. I'd like to draw your attention towards pharma in particular, because DRL for last 2 quarters have been posting very strong numbers, and the commentary has been pretty confident, and the street has been rewarding that. In fact, after the numbers, the stock is up 5%. In today's market, where the whisper number gets out and people start understanding what's the direction, that's the reaction coming in. Even L&T, I would say, because between the 2 quarters, the stock had ran up 600-700 rupees a share from 31 odd, we're talking about 36, 37 odd. But I won't be surprised if the stock recovers in the day, because the commentary for Q4 is good, pretty confident. Watch out for Piramal Pharma, again a pharma stock, done very well. This quarter, last 3-4 quarters, there have been increasingly margin expansion happening there, good 3% days high out there. And one stock I'd like to, from the pharma space, draw your attention, which is not discussed for several days, but is perking up very interestingly, is Shilpa Medicare. Almost 9%. A few days back, I'll say a few weeks back, there was a US FDA inspection at one of the key plants, and a section of the market is expecting some development out there. Rightfully or wrongfully, we'll come to know in days from now, but that is also perking up. In fact, the entire pharma pack is looking okay. Let's discuss other stocks which are buzzing nicely in trade. What are potential trades for today? Aditya Agarwala of Invest for Edu is joining us. Aditya, afternoon. Thank you so much for your time. A good day on the street. How are you placing your trading bets right now?
Good afternoon, Ajay. Thanks for having the show. Clearly, it's a bounce back, no doubt about that. And you take a look at the last 3 trading sessions, including today. We had a massive up move, and then yesterday was a corrective move, and today again we have an up move. Usually, it's the order of the markets heading into budget, and a lot of people can say that it's an interim budget just for 2 months, so one should not look too much into it. But as people are also factoring a return of the same government, so a lot of policies taken into this budget can actually be implemented in the actual budget once the government presents a full-fledged budget. So which is why I believe this budget could actually hold some significance, if not the prior interim budgets. Having said that, yes, markets are charging ahead, and the one index to particularly point out is the bank in Nifty, because that is one which is charging ahead, and I believe this kind of an up move we have seen in Bank Nifty after a significant time. Post HDFC numbers, Bank Nifty has just been underperforming, and today is the day when Bank Nifty has actually started to outperform. And look at the heavyweights, HDFC, Axis, ICICI, SBI, PNB, all are chipping in. And I believe Bank Nifty is something that can continue to outperform